morning to all traders. Happy Easter. It's Easter Monday today, 13th of April. And we're going to talk about the oil market as well as gold. We've had over the weekend, of course, very nice, very good developments in the oils market. It seems that the price war is now ended. Saudi Arabia, OPEC plus with Russia and other countries, of course, doing their bit, have decided to cut production by 9.7 million barrels on a daily basis. This is about 10% of the global output, to be honest. They might increase it up to 20, but all those increases will have to also include shale production, because in the US, I mean, it seems that at the moment there's not reductions over there. So the thing is that obviously the oil markets were volatile. Traders did like the particular event. Obviously in the headline is moved prices of the oil but up, moved like 9% up and 9% higher. However, the question that still is floating around is I mean, we're not going to get the demand really start peaking soon. So this is what is really worrisome. Okay, we'll get output production cuts, but that's just not going to fill in the stocks. Most of the storage for oil as well actually is pretty much to the max level. On the gold market, on the other side, I mean, we don't really see a correlation here, to be honest, but the oil market has been moving up, and on Friday we've had also what I've been talking about actually for a while now, that gold might actually, there's fears of deflation, right? So we've got the CPI on Friday. It came out minus 0.4. So that's quite a deflationary figure there. Not only that, it was actually much less than expected, right? So we need to really look at how inflation is actually going forward, is performing. At these current levels, we're still okay on a year-on-year basis, but this is going to be reduced further, as 95% of Americans actually are inside at home. They follow lockdown measures. Anyway, without further ado, let's just go straight on the charts here to see what we have. So on the oil market, we talked about this move ending down here, and then we said about most likely going to move in a correction higher to take out wave 4 and then move all the way down for wave 5. This move looks impulsive, but it is a correction, of course. We talked about this move over here the other day. We're looking at wave B being here, and then we're looking at a successive break above the 29 to start confirming the move to the upside. As you see, we missed, crossing the 29 barrier over here, and we had another move to the downside. So I label this as a triple zigzag, right? Without that, I mean, I still think there might be a bit more room to the downside, unless if we ended the 5th over here, right? So if that's the case, then we're probably looking at this being 1 and wave 2, then 3, 4, and 5. That would be minor wave 1, then we get 2, 3, 4, and 5. Okay, minor wave 2, 3, 4, and 5. I mean, whatever the case is, to be honest, and since we've got this very good news, I feel that we're going to start seeing the oil markets moving higher, okay? Now, down the line, obviously, these cuts will start from, from next month, if I'm not mistaken. So we could really see, the oil market moving lower even in the short term before we start moving higher again, right? Now, of course, the other scenario is that, we ended down here, all of it. So we're moving up impulsively. That's also a scenario, but I mean, as long as we remain below the 29 level, okay, I mean, for the medium term at least, I see this as a very volatile area. I mean, we could just remain here for quite a while, to be honest, right? Now on gold, there we go. Gold. We talked about this as well. We said that this is like wave 3. We're waiting for wave 4 to come further down. We're looking at this as A, B, and C, right? Well, we've got a ABC over here, X and ABC. and we're very near the previous high at 1704, right? Now, if we break above that level, we're either going to get an ABC, ABC, and 1, 2, 3, 4, 5, which is going to go much lower than 1424, and is going to be a false break above the previous high and likely to be a flat, right? An expanded flat pattern, 1, 2, 3, 4, and 5 down here. Or the other scenario, of course, is that this is an ABC as we look at it, okay? But the other scenario, which I'm actually starting leaning towards because this move to the upside is quite impulsive. It could be the case where we've got A, B, C, wave 4 ended right here at 1450 and we're moving up impulsively. 1, 2, 3, 4, 5. This is minor wave 1. Then we're going to get A2, okay? And then probably we're going to break up above the wave 5 with wave 3, okay? Usually it is, I mean, it could be wave 1 that's breaking that, but if we take into consideration how big this wave 1 is, I mean, from 1450 up to the 1700s, it's a big impulse, right? Any other minor impulse was much smaller. So most likely looking at wave 3 being the breaking one here, right? So there's 3 scenarios here, of course. But as I said, and I've been saying actually, with risks of deflation coming into play, I mean, with liquidity, we don't have any issues at the moment as we stand. But as we see the Fed's balances improve, expanding, and as we see even institutions, having to take out the gold, let's say, gains to cover other losses, it's very hard to say where gold is going to go in the short and medium term. However, what is sure is that we're going to have a very volatile quarter. So thank you for watching, and I will speak to you again tomorrow.